presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
Excuse me, folks. What's going on? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all have been having a fantastic day. Man, just some more movement to the upside on essentially no volume whatsoever. Not necessarily like the headlines have been good at all. Lutnick throwing out some stuff regarding putting tariffs on foreign car manufacturers that even manufacture and assemble in the U.S. So, that's bizarre. Retail is buying a lot of what this is. Now, of course, some positive news for sure is you're getting the 10-year yields coming down, okay? So this is really positive, right? We're at 4.17% in that 10-year. That is pretty lovely. Dollar coming up a little bit, strengthening just a tad at 99.20 as it stands now. USD Japanese yen, okay, still going down. We're at 142, but man, even on the 5 days, we are red. That, okay, that's fine. I mean, listen, there's obviously some kind of positive. This is so wild to me. I mean, it really is. There is some confidence in this market. I don't know if it's a little unfounded. I mean, I really do think Tesla behaving the way that it did on earnings is pretty wild. Did that hit what? Okay, give me a second. No, it didn't at all. 228 roughly. I mean, hey, right? You can sit there and have all the theses you want and everything, and sometimes the market will just do what it does, right? And this is going up. I mean, Bitcoin is tracking back to 100,000, which is very impressive move since the beginning of this month. You're trading around I think a low here about 74,800. Yeah, it's pretty impressive. You're looking at the SPY right now, trading up 0.68% at 554. You have the composite trading up 0.62% at 17,475. Man, the Dow Jones Industrial trading up 0.87%, trading up 348 points at 40,575. With those Russell futures also trading up 0.78% at 19,087. I mean, this is almost just shaking off anything to do with the tariffs, because definitely, and I know you discussed this a little bit, and yes, some of the smaller companies, in the Russell might benefit from tariffs, but a lot of small companies get crushed in that environment, right? And it's just kind of like we're behaving like they're not going to be a problem. Okay, so interesting for sure. Again, went over the DXY, but trading at 99.21. Trading up 0.17%. Gold coming down a little bit. Really, again, trading in this just kind of narrow range, okay? You're up about 0.41%, trading at 3,330. I'm just going to say 3 because I want to say 4 threes. On that note, look at Goro. I mean, now this is rallying, maybe not for any particular reason that I could find. Quite a lot of volume on the day prior. Bizarre. We were up 32.84%. Now, these guys had pretty bad earnings. So I'm not really sure what's dragging this company to the upside right now. It does not seem like there's any kind of news for them, and it doesn't seem like anything's improved for them materially. So kind of interesting. Let's see here. We're gonna go over one stock. I want to talk about Nucor at the end of the show. Taking a look at Teradyne here. only got about 4 minutes left here. We're going to go over to Basil here briefly for the first segment and then into the second segment. You're off 1.24%, okay? So actually did not do too bad on earnings. Man, this is going to require a little bit more time than I have to talk about it. This is weird. I was looking at their financials. I didn't realize exactly how much exposure that they had to China. And, instead of just looking at with China, let's take a look at what their, percent of revenue comes from the US. And I was genuinely horrified to find out that it was about 13% last year. And that is very risky. But there's some stuff in their outlook that I think is worth reading, not necessarily pro-Teradyne. I'm actually now kind of reading through some of their earnings, what they said, and then really their global exposure. A little bit nervous with that company deciding to try to take a play. There's just nothing I'm seeing right now, really, in all of my kind of analysis that, I want to get into in any major way. Yeah, it's bizarre. Okay, listen, let's go over right now to where I'm at on TFNN.com, right over on the newsletters tab. It is a Tuesday, so you know what that means. We're going to be joined by Basil Chapman. Basil Chapman is the author of the Opening Call newsletter. Of course, he is also the host of the Tiger Technicians Hour on at 10 a.m. Eastern Time, right here on TFNN. Basil, are you with us?
I am. How are you?
I'm doing well, Basil. How are you doing?
I'm doing well, thank you. I'm this fascinated by this market. It's like the tide is slowly moving up, but very selectively. Even within sectors, some of the stocks are just not participating, and some are. And then you have a couple of leadership that just take over the story. So I'm looking at the Dow right now. The Dow's up 361, and it's so fascinating because we are so close. I think we need about another 20 points or more, just over 20 points, and then that pink 9-period moving average that I'm showing here on the daily chart will turn to green, and that to me will be a very important factor because it says that there's a good chance at that point that we should rally over the next few days going into May, and that would be really important. You've already got that action in the S&P and the QQQ and the even the Russell 2000. They've all had the 9-period moving average turn up. I'm just waiting for the Dow. We're all long the Dow, and it's acting pretty well. The day is young and the month is young. Anything can happen between now and tomorrow at 4 o'clock. But as I'm looking at it, this is interesting because, you said you're looking at steel, but I went through this the other day. Look, the steel sector, the SLX, that's a pretty darn good rally on the daily chart. When you look at the weekly, you say, it's just back to the 200-period moving average. And if you look at the monthly, that is one wick of the month. When you go from the low, which is in the 52 area, and you go to where we are right now at 61. So that's what I'm saying, that this is a really mixed market. And you spoke about Nucor. Well, Nucor is doing very nicely today, but when you look at the weekly and the monthly, it is lagging badly. So I'll talk about what I'm anticipating and what we're doing and positions that we have when we return.
Basil, please. And also, I would love to hear some more about steel, too. So, Basil, please stay right there, folks. I'll be right back with Basil Chapman after this break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. Jacob Shoup, you're watching The Tom O'Brien Show. We are joined right now by Basil Chapman. Check out his newsletter, The Opening Call Newsletter by Basil Chapman. If you do so, you additionally get access to some of his subscriber-only webinars. Most recent one did was in November, 90-minute live webinar, and we might have something cooking up for you all in the future as well. Basil, before we went to the break, I kind of want to reiterate what you're saying. Weird market. The tide definitely slowly coming in. I'm seeing you're looking at Bitcoin right now, and that was really, I don't know if you remember, and you're very, you have great observation skills, so maybe you did, but Bitcoin started turning before kind of the rest of this market did, you know?
So what I was looking at with Bitcoin, and we are long Bitcoin, what I was looking at is there's a technique that I developed a long time ago. Instead of just a one trend line, I make a little mini channel. Yeah. Look at this channel here in Bitcoin. This is the Bitcoin continuous contract. Look at this green line and this pink line, this little narrow, it's basically like a little mini channel. What I'd said was, I call this the inside track repellent zone. As soon as it goes above it, there are certain factors that are very important to turn it into a propellant zone, which is exactly what happened. One of those is where you can see, let me see, I can look at the Tiger TV. Yep, I can see. Right there, where it turned green, that 9-period moving average, and look at the MACD strengthening, look at the stochastic strengthening, look at the blue on-runs volume, and that gave us a big burst to the upside. Now we're getting to the resistance that you had on the 3rd of March at 90, is that 96,600? Yes, 96,864. So what's interesting is, look how it's stalled right at this particular level on the left. So what I like is, if I have a particular symbol that I'm following, and it makes Chapman wave peak Ds. In other words, it goes to 1, 2, 3, 4 higher peaks, which is A, B, C, D. D is the one. And then it pulls back and says, it likes that character. Therefore, I can anticipate it should do it again. That's number one. Number two is, if it's walking the 9-period moving average, this green line right here, I love that, because that's it's like a springboard, and the black 14-period moving average, when it goes over the black, it turns green. When it's under, it goes pink. So this to me is really positive. So I like what's going on in Bitcoin. It's stalling here because it got to that left side resistance. The only way it's going to really push much higher is if it snaps through it. And probably, I'd said earlier that I was anticipating 87,500 to 88,900 will probably be the breakout. Well, now we're at 96. Yeah. So I'm looking at this and saying, okay. And also, the dollar's weak. The euro's actually a little bit weak. Gold is digesting gains, as we spoke about before. So this is kind of an area, and the market is always looking for what it retreated best at. So in this case, I think it's so far, it seems like Bitcoin has a place here. So that's important.
Absolutely.
So to answer your question, yeah, I see this. It's gone from this this arch formation into a potential cup formation. And if it can break significantly into the 98,000 area, then I think then 100 will be backing. And that means it'll be the place for money to go to in the shorter term. So that's why I was saying to you, the SLX, which I've been monitoring closely, we don't have a position in the SLX. I want to do, just didn't quite get in there because it's been gapping up. But it isn't a leg D. When you get to a peak D, but it's under a previous high, I always say, oops, I mean, that's good action, but I want to snap through the previous high in like a leg C to show real power. So this is saying it's very interesting that in this environment, with every single economist rolling their eyes and saying tariffs are going to kill the market, steel, this is a deep cyclical, is holding well at this particular point. So that's why I like to say we've got to study the charts because they tell us a lot more than just reading the newspaper. So I like the steel. I like what they've done so far. To break to the new level, I think we need another burst, and that's the reason why I'm really focusing. So the Dow is the one that has a lot of deep cyclicals, not that many, but it has enough deep cyclicals. That's why I say if the Dow itself, the Dow 30, can really push higher in this time frame going into the close on Wednesday, and we never know what happens on the last day of a trading day, especially one as important as this. Totally. When you're looking at this long wick in the monthly charts for all of the key indices, we'll see if there's buying that goes into Thursday. And if that's the case, then I think I have to go one step at a time here. So we're very selective. It's interesting that the AIQ, which is the AI, this is the Global X Artificial Intelligence ETF, holding right here at the 200-period moving average, has come very nicely back from 31 to 36. And there was a lot of talk saying AI is just, that's years and years in the future. But have a look at this monthly chart. I'm impressed with the wick. So that's what I'm saying. So I'm trying to ignore the news. We have AIQ. We're trying to add to that. And something I think that's going to give us a good clue as to what happens going into Friday's close this week is Robinhood, which is stalling a little bit here at 48. Let's go to 49. But it's had a very nice move from 29. We've been long for quite some time from the 16s. But just in this particular instance, we've added to it. But it's going to be very important because you can't be blasé about it. I think money is coming in. I think the layperson's coming in. Yeah. But until I see the price action, and that would say that Robinhood trading at 49 right now, if it starts to trade by Thursday, it's already touched 52.5 to 53. That, I think, is going to be a big positive for me in terms of my looking at the market, trying to use this as a little bit of an index for the markets, like a bellwether, just putting your finger up into the wind. So that's going to be important. If it starts to slide under 44, that's a problem. So in a way, it's a little bit of a bellwether. And then, as I said, with the Bitcoin, so now you've had gold. Look how it's only down 14 points today, and it made that high just above 3,500. I still like it. We still have our position, core position in the physical gold. It trades exactly like this. I'm watching it closely because that 9-period moving average is so far away from the black 14-period moving average. Gold would have to slide under 3,200 to get that green to go pink, which would be very negative. So far, I'm treating this as a consolidation in an area that found tremendous favor. Definitely. Is somewhat overbought, but I don't actually see the selling coming in right now. If you look at the volume, the volume on-balance volume starting to pull back, but I'm looking at the price, and if the price is holding, to me, that's really important.
And really, the breadth that gold has been trading in, let's say the past 4 trading sessions, has narrowed as well.
It's really a perfect consolidation.
Absolutely.
It'll be unperfect if it goes a little bit longer sideways, because sideways would mean you've got to consider that there's some distribution going on.
Yeah.
I definitely want to see a pop to the 34.10 level, and it's at 33.33 right now. That would be, I can start to draw in that cup formation that I always like to draw to say, well, now we can try for a double top. But we go one step at a time. So it's a fascinating market because even the bank, we have Bank of America. I thought, we'd get out of Bank of America as we usually do every year or so. We've in Bank of America, it runs sharply, then we get out of it, wait for it to slide, and we get back in. This time we've been in for the move up all the way to 48, double top, comes down, and it's still holding pretty well. So I'm kind of impressed in just in the bigger picture. If the financials can hold through the next, I have to say, the first part of May, you want to see that XLF, and that's the S&P Select Financial Spider Fund. I want to see, there's that same thing that we looked at with Bitcoin. You see the Chapman inside track, repellent zone, except today I believe it just started a leg D. It has to push away from this very sharply. The technicals have improved a lot. So if the financials can move towards from 48 into the 50 area by Friday, that'll be impressive. And not if it's under 46.
Basil, I wish we had like 4 more segments. Great as always. Looking at KRE too. I mean, KRE is held pretty well. Basil,
very nicely. That's the regional bank. Yes. That's very important. Basil, and IWM is holding quite nicely.
Absolutely. Well, listen, thank you so much. We'll see you tomorrow at 10, Basil.
Thank you very much, Jacob.
Take care.
A good evening.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. Jacob Shoup watching the Tom O'Brien Show. Always fantastic having Basil on. I don't know if I just came on. Welcome back is what I was saying. It's about to rain here, which is pretty nice. a little woodpecker out there earlier. There's nothing like listening to what I think it's like the red-headed woodpecker or something in the morning on this bamboo. Fantastic kind of stuff. It's what we wake up in the morning for, everyone. And then additionally, to look at things like KRE. I mean, this is strong movement. This is one of the sectors that, considering all the kind of refinance risk that we could end up having in the middle of this year, is one that I'm most kind of suspect about. You were talking about regional banking. I mean, these guys are, holding a ton of commercial real estate. Office spaces, all that kind of stuff. But listen, I mean, this is very good price action in KRE. And now, one thing that I think is really important to know here is there's a lot of retail buying going on here, right? They do not seem to care. I mean, I think a problem is, again, and I was discussing something on one of the larger forums that I go on, and this one guy was saying, like, you just need to be risk on. The market's always, risk on. There's no such thing as risk management. And my whole thought and thesis is that being in the market is entirely about risk management. Society is risk management. It's something humans do. And that had so much. And again, whatever. These are small slice of people on a relatively large forum, but still a forum. These are internet people, whatever. But I see that kind of conversation everywhere, right? Especially among retail influencers. I hear it from people that I know in my daily life, which is always, I love that. But sometimes people will just they're just. I mean, look, it looks like Tesla's trying to crest 300. And for no huge reason. I still think, even with that DCF we were talking about a while ago, I mean, I don't know. They just had really tough earnings, but nobody looks at it like that, right? And again, I'm wagering that a lot of this is retail getting in, right? And I've seen, after this earning and this write-up, I've seen the influencers come back, and I've seen the comments hating on the Tesla bears and all that kind of stuff, right? And it's like, the bull nature is healing, right? That's what we've been hearing for a long time. And they don't care that there's a 2.1% operating margin or net income's down, or they're only positive because of the EV credits, So they're just going to buy. They're just going to buy anyways. That's kind of fascinating. Earnings have not been horrendous, especially with Google and everything. Of course, we're going to have, who's it? Microsoft tomorrow. I think Meta as well is tomorrow, which that's going to be pretty fun just for the sake of it. Give me a second just to be right. Yeah, Meta. Okay, and Qualcomm, which again, something I want to talk about. Qualcomm, big thing with phone chips. With Teradyne, what they kind of said on their quarterly, and they're like, hey, we expect revenue from mobile testing devices to be softer in Q2. Because it was so strong in the past 2 quarters, and then they're definitely seeing a substantial decline in memory tests due to a massive flow of high bandwidth memory into the market. Looking at you, Micron. Might be a tough spot for these guys, but we'll talk about that at some other point in the future. Let's go over right now to our web browser. We're going to type in ord-oracle.com. Of course, it is a Tuesday, and you know what that means. It means we are joined by Tim Ord of the Ord Oracle. Man, it has been fantastic having Tim on. I think I speak for everyone through this entire hectic market cycle for sure. Go to his website, ord-oracle.com. You can check out his newsletter. You can check out his book. You can contact him as well. Tim, how are you doing?
Good. How you doing?
Doing fantastic. How's your weekend? Was it good? Look at this market. We have low volume to the upside, kind of what we were talking about last week. Kind of curious to see what you're looking at.
Actually, look at the bigger picture here. The top window is the 10-day average of the trend. I keep saying, we need panic in the market to really get a bottom going. Uh-huh. And this is yesterday's close, comes in 1.2. We're going in the right direction. But really still not there. I mean, it needs to go higher. This 5-day down here, is getting close, 1.2. This has been above and below the 2-day, which is the least important because that's the shortest time frame. 3-day at the bottom kind of hit a couple of times, but we need really that 10-day to get there, and I think we're going to head there. Here's some bullish. So the 10-day trend is heading in the right direction, 1.12, not quite there yet. So I don't think I still think there's a pullback coming. I'll show you why here in a bit. But anyhow, we're starting to see bullish signs here. Here's the WAG breast thrust indicator. We talked about this. This got triggered, I think, last Thursday or Friday. But anyhow, it did trigger. In a nutshell, it's NYSE advancing issues divided by the NYE total issues. You take a 10-day average of it, needs to go hit 0.4, and then rally to 0.6 within 10 days or less. It did that in 10 days. So we do have a brag thrust, ZBT, I call it, Zag breast thrust indicator. And if you notice, the last time we had one was in July, which is pretty close where we had one just now got triggered. And one before that came last April. And so a lot of times these come in at the same price levels.
I see.
And kind of like a base building here. So I think we're actually base building. We're probably making a low. I don't think the rally's going to keep on going because of the volume issue. We'll get to that right here. But I said this is a short-term picture. This is goes back to actually first part of March. So it's basically 2 months of trading here. But this is the most important area right here, which we're kind of screwing around with. We did trade this day from here to here. It's actually a 9.52% day. And now we're trying to break above it. I said in my market letter yesterday, I thought we might try to fill that gap. And that appears what's kind of going on here from this. I did this chart at the end of the day, but we're kind of creeping up here and probably may attempt to close that gap, which is basically this pink area here. Volume's really light. As it goes higher, the volume's actually been going down. Not an ideal situation. Once you break above a previous high volume day, you should see a sign of strength. And even though we did break above this day, we did not have a volume increase. But we did close above it. Once you close above the previous high, the market actually can still push higher. I hear the music.
Yeah, Tim, please stay right there, folks. We'll be right back with Tim Ward after the break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup, watching the Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. You can check out his website at ordoracle.com. That is ord-oracle.com. I believe Tim is still trying to get his charts ready from the break, unless he's here. If I don't hear him, I'm going to talk about something else in the meantime.
Can you see that?
Okay. Tim, that looks good if you can kind of draw on it. We'll work on something as well after the show. Can you hear me?
Yep. Can you hear that? Or what do you got in front of you?
Yeah, I see the SPY, the 10 and 21 day trend, not near bullish levels, suggesting some SPY retracements will be likely.
All right. Okay, that's where we are then. Anyhow, can you see this pink area I've drawn where it says gap?
Yes.
All right, so I think that's where we're going to go. We're probably going to fill that gap. Yeah. And then, because market's just kind of hanging up here. We got virtually no volume going up here. But you see this low right here?
Yes.
All right, that low is probably going to be tested first. It's probably going to go up and get through. And if that's test on a lighter volume, then that's going to be support. But I think we're actually going to go back down to, this is the, I think, April 9th low. I think we're going to test that low, and I think that's probably where the bottom's going to go in. I'm not sure we're going to get down to the April 7th low, but the April 9th low is probably where we're heading.
Well, let me ask you, Tim, like, what are you making of this? I mean, because I'm seeing the same thing, right? There's just not a lot of volume here, and I mean, of course, the market expended a ton of energy, right, going down. But what are some other times you've seen in the past, right? And keep in mind, a lot of my trading experience comes from these, in a time where we had just an unbelievable bull market,
Right.
So were there times after COVID where we had a massive volume low and we were still able to move up on light volume, or what are you seeing with that?
Well, the COVID low, that moved up. If you go back and look at the trend had a huge amount of panic. This one doesn't. So that's a little bit different. But if you never want to short a market that's been up 5 days in a row, I think yesterday it marked 5 days, and today we're at number 6.
Yeah.
When you're up 5 or 6 days in a row, the market will be higher 83% of the time within 5 days.
I see.
So that's the reason why I think we're going to go up and close that gap. And after you have 5 or 6 days up in a row, the market corrects a little bit, 2-3 days maybe, but not much. Then it makes a higher high. That's when usually the market reaches an exhaustion point. So it probably won't be this week. Probably next week.
Sure.
But the 5 days in a row, you never want to short them.
I
mean, today looks like it's probably going to be day number 6. And so we may see a little bit of consolidation, maybe Wednesday, Thursday, possibly Friday. The next week, we'll probably see the high. And so so you don't want to short here yet. Everybody's kind of asked, well, when can we go short? Well, not yet, and it probably won't be this week.
Sure.
And I may not end up with a clear short signal. Some of these short signals are pretty kind of tricky, I guess you might say. So I work best at bottoms. But anyhow, I think we're going to go basically to the April 21st low. That's going to be the first support. If we hit that with at least equal volume, we'll go down to the next low, which had huge volume down here, and we'll have a hard time getting through that low. So I'm thinking this low the low of April 7th may not be touched. That's my point. So
you can see like a 510 touch at least.
A what?
Like that price at 510, that last kind of red and the blue, if you see what I'm saying, the lower one.
Is this right here, or there's one down here?
The one from April 21st.
April 21st, right. I'm thinking,
yeah.
I think that might, 510. Yeah, around 510 is going to be key. Okay. And so that would have to be a light volume pullback,
big time,
which would be bullish. So if you get a heavy volume pullback, you're going to go down to this low, the April 9th low.
Yeah.
If it's a light volume pullback, which is more bullish, you may just stop at 510. So we'll see how that goes. We'll pick out the bottom. But I'm hoping, the trend gets really high. You get the 10-day trend, not ideal here. The 20-day trend is 107, so not a lot. We got to get going here because we got to look at the gold market here real quick.
Totally, yeah.
All right, I'm out of the GDX for right now. The reason why, this is a monthly GDX with this Bollinger Band. You get 80% above it. That's usually time for the consolidation. I sold out around the 50 range. Went up, I think, 52 something, 52 and a half, give or take. But once you get above 80%, you might as well just sell, and that's what I tried to do. So that's the reason why I'm out. RSI got up over 70. Yep. It's backing off right now. But some sort of a consolidation. It's an uptrend. There's nothing really to be fear of. This is the daily trend. I think 3 drives at top was what's going on. And we're starting to pull back. Had some kind of big volume days on the pullback. Got a little consolidation, but ultimately we're going to head down to 39. I think that's going to be a terrific buy area. 3 drives the top pattern. That's when the second top traces 61.8% of the previous uptrend. Then you go up to a third top. Third top is the top. So probably consolidate into May sometime. Maybe June. But it looks like kind of May is. Depends how fast this pullback. But just be patient. But you'll see a lot of fear around 39, and that'd be time to buy. Here's the bigger trend. I showed this chart before. Still bullish. We're kind of playing some pullbacks now. They'll come and go as go forward. I'll probably play them, but in the big nutshell of things, this actually what the chart is the weekly HUI gold ratio, and anything below 0.12, we're actually 0.12 right now. I don't have my drawer on, but anyhow, we're down around 1.2. So the bigger scheme of things, we're still cheap in the gold stocks, and so I think that 39, or in this case, is the HUI is on top. It looks like about 350 pullback is where the HUI should bottom out in that vicinity, and if the trend's still 0.12 in that range or even lower, it'd be a buy. Usually when you get up to around 1.7, it's time to sell, which we're a very long ways from doing that. It may take a year or 2 or 3 or 4 to get there. I don't know how long, but I think what's the gold market's in, at least the gold stocks are in, is a multi-year buy.
Sure.
And the reason why we kind of showed this chart last time is the HUI gold ratio. This ratio goes back to 93, and we turned up to trigger this cycle from a down to an up.
Yeah.
On a down cycle, in an up cycle, when HUI index is outperforming, the RSI stays above 50. When it's underperforming, it stays below 50. And to trigger the bear to the bull, it needs to get above 60, and we're at 61.03. So now this RSI in general on this ratio should basically be heading higher, possibly over the next 12 years, because the last 2 were 12-year cycles. So we'll see how that plays out going forward.
Fantastic. Tim, thank you so much. We'll definitely be watching the volume on this SPY, looking to see some of those gold miners pop up. We'll see you Thursday, all right?
All right, thanks.
Take care, Tim. Folks, if you sit right there, we'll be right back. We got a short little segment to wrap up the day.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Yeah, welcome back, everybody. This is Jacob Shoup, Watch the Tom O'Brien Show. We got a short little segment here, joined by Basil and Tim Ord. Fantastic, really, having both of them on. I was just looking at CMBS. This is iShares commercial mortgage-backed security ETF. This was this. Who posted this in the den? This is, we've been talking about this, Raul. Yeah. Oh no, it wasn't Raul, but that was a cool thing. What Jimmy posted. Yeah, from Bloomberg here. Office loan trouble signals problems ahead for $650 billion bond market. Yeah, I mean, I don't know what they're going to do with that. I mean, do they just sell it off to people? Which is most likely what's going to happen. But I think this is still a problem. You have, again, still with this U.S. I mean, that decline in manufacturing segment sector is intense. You have the yields coming down right now, most likely in anticipation that the Fed will cut rates. Inflation is still above 2% target. I don't think that gets better necessarily with the tariffs. Like you see the predicament that I'm in here, right? And how to think about this. But of course, you just get more data coming out, and you just keep feeding that to your models, and you eventually get something. But I still think this is in a tough kind of spot. Now, what I will say that I think is a little bit positive, at least on the idea of people still spending through some higher prices, is really going to be with Nucor, right? I want to add a position to Nucor here. I really do. You have 1.9%, okay, after earnings. Earnings were not terrible at all. Give me a second here. They're expecting some better, if I can just see this here. Yeah, we'll talk about this during the 4 p.m. stock market update. But these are not terrible earnings, and they said, hey, listen, the demand is still here. Rebar prices are coming down a little bit, so that's cutting into some of the revenue, but the volume of rebar is increasing for them. Folks, thank you for joining me. We'll talk some more about Nucor at the 4 p.m. stock market update. Take care.